Hello ladies and gentlemen, welcome to the review of the markets for October. My name is Chris Land, I'm the Deputy Chief Investment Officer here at True Potential, and today I'm going to have a look at how markets have performed and discuss some key themes that we're currently seeing. Okay, so starting off with equity markets in local currency terms, they have in general delivered fairly positive returns for investors in September, continuing the strong performance that we've seen this year. Global equities are up just over 2%, supported by healthy returns from developed markets excluding UK equities. US, European and Japanese stocks returned 2%, 4% and just over 4% respectively. Japanese equities have performed well, with the Japanese yen weakening over the month, nearly 6% against sterling. So that's really benefited domestic exporting companies and over the longer term a more investor-friendly Japanese government through improved corporate governance and dividend payouts. European equity markets produced favourable returns, helped by improvements in economic performance across the euro area, and the benefit also from a weakening euro. The impact from currency has been a significant influence on investor returns this month, with the yen and the euro both depreciating over the month. The euro began to unwind after what started off as a knee-jerk reaction after the German election, although this appears to have become a broader hit on euro bulls conviction. Sterling, on the other hand, has transitioned in the opposite direction, gaining nearly 4% against the US dollar. We have to remember sterling has fallen to very low levels following the European Union referendum in the summer of last year. Signs of stronger than expected retail sales figures and also the possibility of higher interest rates that could take place as early as potentially November this year has been behind the rebound in sterling this month. The impact from currency will depend upon the asset you hold. An unhedged, sterling-based UK investor holding overseas assets will lose out from sterling appreciating, however they will gain from sterling strengthening. On the other hand, fully hedging a portfolio helps to smooth the effects of currency movements. The broad mix of strategies within the True Potential portfolios provides a real measure of protection. The potential for higher interest rates in the UK has led to bond yields pushing higher, meaning returns from UK gilts and UK corporate bonds produce slightly negative results for investors in September. It's not just in the UK, where central banks are indicating the possibility of higher interest rates. In the US, the Federal Reserve continued to forecast one rate hike for this year, despite inflation being fairly subdued, and also announcing in October as when they would initiate the process of shrinking their $4.5 trillion US dollar balance sheet. Consequently, this is putting pressure on bond yields. In commodity markets, we've seen a resurgence of the oil price, reaching a 2-year high on the back of greater demand from China and Turkey's threat to disrupt oil flows from Iraq. This is in addition to OPEC, Russia and several other producers having cut production since the start of 2017. Okay, that's everything from me this time. I'll speak to you next month. Thank you.